Welcome back to EDS, and in this video I'm going to show you one strategy that's going to get you a crazy high win rate, and it's going to be backed by statistical analysis. I'm talking about 60, 70, 80, 90% plus win rates. So what we're going to be doing is writing options contracts. We're going to be short or selling options contracts, and that allows us to craft our probability of success before we even enter the trade. So the first thing you want to do is just pull up a watch list. You want to order everything from high to low IV rank. This is just a pre-made watch list that has underlyings with high options volume. You only want to look at things that have an IV rank of at least 30. GDXJ right now, it is a Saturday, so the market is closed, but it last traded at $50.70 a share. It has an IV rank of 55.4 and an absolute IV level of 31.8%. So GDXJ looks pretty nice to trade right now. And once you've selected your underlying, you want to go over to where you can see a list of option expiration dates, and you want to pick an expiration date that's about or between 30 and 60 days out in time. It needs to be a monthly, not a weekly or quarterly expiration date. So we've got one here, 34 days out, March 21st. So we're going to open that up, and now we can see the options chain. So very quickly, I'm going to explain what's happening. On the left, we have calls. On the right, we have puts. This orange horizontal line shows us where the price of GDXJ is with respect to the strikes that are going down the middle. If we look in the top right, we can see the IV percentage, 36%, and we can also see the expected move of GDXJ over the next 34 days in parentheses here, which is plus or minus 4.33, and that's also visually displayed with this orange vertical bar. That is very, very important information, because that's what we're going to be using, or one of the things that we're going to be using to get a high probability of success. We also have these dotted blue lines that show us our standard deviation levels. And when we are short an options contract, we basically want price to stay away from that contract. We don't want price to go near it. We want price to stay away. We want the contract to stay out of the money. So if we know what the expected move is, and we know our standard deviation levels, then we simply just need to sell outside of the expected move around the one standard deviation level, and that's going to give us a high probability of success. Now, that will typically line up with a delta of between about 15 and 20. Okay, so if we start off by looking at our delta column on the call side here, we have a 21 delta at the 56 strike, which as you can see is just up against the one standard deviation level, and we have an 18 delta on the put side at the 46 strike, which is again up against the one standard deviation level. Both of these contracts are outside of the expected move, and what you'll notice is that we've now created a range for ourselves that we want price to stay between. And if price is between this range, between these two contracts at the point of expiration in 34 days time, we will keep 100% of the premium that we collect up front. And that's how we're going to make money. Now, what's the chance of making money on this trade? Well, if we look in the bottom left corner, we have a pop number here, which is probability of profit, and that's currently 71%. That means we have 71% chance of making at least 1 penny on this trade. Okay, and that's if we hold all the way to the expiration, but we don't have to hold all the way to the expiration. We can get out at 50% of max profit, and that's what this P50 number here is showing us, is the probability of hitting at least 50% profit at some point in this trade over the next 34 days, and that's 82%. So we've got probabilities of success of between 71 and 82% right now. And if we wanted to get out of this position at say 25% of max profit, then our probability of hitting that will be closer to 85-90%, maybe even a little bit higher. Now, these probabilities do not take into account that implied volatility is generally overstated compared to actual volatility. So in reality, our probabilities of success would be even higher than this. Okay, now how much money can we make on this trade? Well, if we were to get filled at this mid price here of $1.26, we would collect $126 upfront on this trade as soon as this order gets filled, and our our broker is going to require $546 in buying power to open this position. So we're going to collect 126 and our broker is going to use 546. So as you can see, we're getting a pretty healthy, nice return on our capital in 34 days, and we've got very high probabilities of success of 80+%. Okay, and that's literally it. This is how you can craft high probabilities of success in your portfolio. You want to have as many of these positions as you possibly can within your risk metrics, and we're gonna go into that in a little bit more detail in just a second. You want to have as many number of occurrences as possible. We want to eliminate short-term variance. We're running a casino model. We're running the insurance company model. We want to roll the dice as many times as possible. Over one trade, it could go good, it could go bad. Over 1,000 trades, could go good, could go bad. But over 10,000 trades, 100,000 trades, it's impossible, or it's practically impossible for the odds not to work out in your favor. Okay, so how do you know how much risk or how much buying power you should be allocating to your positions? How do you know how to size your positions effectively? Well, in order to figure that out, we've created a free position sizing template that's available for everyone to use. The link is in the description. Just click the button and it will take you over to this spreadsheet, and at the top you simply enter in whatever the sizes of your portfolio. Say if it's $25,000. Below that you can then enter in whatever the current VIX level is. Say if it's 12.9, and then you can enter that in there, and everything will then be calculated for you. It will tell you how much buying power you should be allocating, the maximum amount you should be allocating to defined risk positions, undefined risk positions. What we went over today was an example of an undefined risk position. It tells you how to structure your portfolio. As long as you follow this guideline, you will be absolutely fine over the long run. You won't have any issues. If you would like to learn in more detail about what we do and how we do it, the link will be in the description. Click on EDS Premium and get yourself signed up. Once you're inside, you will have access to our portfolio that will allow you to see the positions that we're placing, how we're managing risk, how we make adjustments, all in real time. There's also a full course, so you don't need to know anything prior to joining. We will teach you absolutely everything from start to finish. And if at any point you get stuck, it's a private community, so you can simply just ask myself directly, or you can speak with other like-minded individuals inside the community. And there's a 100% money back guarantee. So once you have studied the full course, followed some of our trades, if after 6 months you are not profitable for whatever reason, then we will work with you for free until you are, or you can simply request a full refund. So it's completely risk-free, and it's $9.99 a month to join right now. The price will be increasing. That's not a sales tactic. Our pricing started at £1 a month. Our first wave of members became full, then we increased the price. We're now in the second wave. Once the second wave is full, the price will be increasing further again. So you are definitely rewarded for getting in early, and the aim of EDS Premium is to teach you the skill. Once you've learned the skill, no one can take it away from you, and you can keep it for the rest of your life. We do not want to keep you dependent on us. We want to teach you the skill, and we aim to get you to that point of where you are completely self-sufficient within 6 to 12 months. You are, of course, always welcome to stay and be a part of the community, but within 6 to 12 months, you should be good to go. So with that being said, I will see you guys on the inside.